Okay, so picture this. A company, right? Its stock is up like an insane 420% since its IPO just a couple of months back.
Yeah, 420%. That's definitely turning heads.
For sure. It's causing, ripples across the financial world. It even peaked near $300 a share, starting from just $31.
Hmm.
But the real question, the one we want to dig into today, is what's driving this? I mean, is it just another tech stock going wild, or is there something more fundamental going on here?
Exactly. And that's what we're focusing on. This isn't just, another flash in the pan tech story. Today we're doing a deep dive into Circle Internet Group. That's ticker CRCL. They're the company behind USD Coin, or USDC.
Right.
And we've looked at, well, their recent blockbuster earnings, some pretty deep market analysis, and crucially, the latest shifts in regulation to really get a handle on it.
So our mission today is pretty clear. We want to unpack all this for you. We'll explore why USDC is becoming such a big deal in digital payments. We'll also look at a key regulatory change that seems to be really pouring fuel on the fire.
Yeah, supercharging its growth.
And we'll examine how Circle is basically building the plumbing, the infrastructure for what some people are calling the future of money.
So yeah, get ready for some surprising facts, some key insights. It really feels like a kind of stablecoin gold rush story unfolding.
Okay, so let's start with those earnings. You mentioned they were blockbuster.
Absolutely. Their first report as a public company, and they knocked it out of the park. Revenue soared 53% year over year, came in at $658 million,
Wow.
which beat analyst forecasts by about $11 million. And the stock jumped again over 11% in pre-market trading after that news.
On top of the already huge run since the IPO in June.
Exactly.
Yeah,
It's been quite the ride.
it really is remarkable. You mentioned that initial price, $31 a share, now trading around, what, $161 after hitting almost $300 back in June.
Mm-hmm.
It's definitely one of the most, let's say, compelling IPOs we've seen recently. But, okay, beyond the stock price excitement, what's the actual engine here? What's the core business doing so well?
Yeah, it really comes down to their main product, USD Coin, USDC. So the amount of USDC out there, the circulation, it surged an incredible 90% year over year. Hit $61.3 billion at the end of Q2.
90%.
90%. And it's kept growing since then. Early August figures put it at $65.2 billion.
Okay, so that's a huge number, obviously. But what does it mean in terms of, like, market position?
It means their slice of the stablecoin pie jumped to 28%. That firmly makes them the number 2 player, right behind Tether, which is still the biggest, but USDC is gaining ground fast.
And then there's the transaction volume. I saw a number that just seemed astronomical.
It is. They processed nearly $6 trillion in transactions just in Q2.
6 trillion.
Trillion, with a T. And that's up 5.4 times of the year before.
That's hard to even wrap your head around.
It really is. And Circle CEO Jeremy Allaire, he basically said USDC is the fastest growing major stablecoin. Institutions from, well, everywhere in finance are apparently lining up wanting to partner with them.
Yeah, that kind of volume, $6 trillion, that tells you it's way beyond just people trading crypto back and forth, right?
Oh, absolutely. This points to much bigger uses. But there's another crucial piece here, the timing. This massive growth spurt is happening right as a major regulatory piece clicked into place.
Ah, okay. You're talking about the Genius Act.
Exactly. President Trump signed it back in July. And just for context, GENIUS stands for General Establishment of New Innovations in Unified Stablecoins Act. Bit of a mouthful.
Yeah, sounds like it.
But what it does is huge. It creates the first ever federal rulebook specifically for stablecoins. This is, well, it's a profound shift. It basically gives companies like Circle the federal stamp of approval they've wanted for ages.
Okay, so connect the dots for us. What does this specific law, this Genius Act, actually mean for a company like Circle day-to-day or strategically?
Well, the act demands that stablecoin issuers hold 100% reserves. And not just any reserves, but high-quality stuff like treasury bills. It also sets up a clear path for getting federally licensed.
Right, and Circle was already doing that, weren't they? The 100% reserve thing.
Precisely. They've always operated under those strict standards. So for them, the Genius Act isn't a hurdle. It's actually a massive competitive advantage. It validates their whole approach.
Okay, I see. So it kind of levels the playing field, but in their favor, because they were already playing by those rules.
Exactly. It positions them, as one analyst at Wedbush put it, not just as some crypto company, but as an infrastructure backbone for money's future. That kind of regulatory clarity. It's like gold for attracting big institutions, serious capital. It's a game changer.
Got it. Now, I did see they reported a net loss, though, something like $482 million for the quarter. How does that fit with the soaring revenue picture?
Right, good point. And you have to look a little closer there. That loss figure sounds bad, but it was almost entirely driven by one-off costs related to the IPO itself.
Ah, okay. Like accounting charges and things like that.
Exactly. About $591 million in IPO-related charges. These are non-cash, non-recurring costs, basically, the
Mm.
expenses of going public, if you take those out.
Then what does the picture look like?
They would have actually posted a healthy profit, about $109 million.
Okay, that's a really important distinction. So the underlying business is actually quite profitable.
Very much so. The core metrics are strong. Revenue growth, like we said, 53% year over year to $658 million. Adjusted EBITDA, that's a measure of operating profitability, hit $126 million, up 52%.
And the income from their reserves.
Really robust, $634 million, up 50% year over year. Their business model is actually pretty straightforward, but powerful.
Explain that. How do they actually make money from USDC?
Well, they take all the dollars that people use to buy USDC, and they invest those dollars primarily in short-term U.S. Treasury bills and cash. They then earn interest on that massive pile of reserves.
So with over $65 billion in assets.
Right. Earning, maybe 4 or 5% annually in the current environment, that creates a huge and growing stream of revenue. It's simple, but very effective at scale.
Makes sense. So it's not just about the coin itself, but managing the reserves securely and profitably.
Precisely.